Welcome back. In this video, we'll discuss the rules on income taxation of partnership and partners. Okay, so let's define partnership first. So, according to Article 1767 of the New Civil Code of the Philippines, by contract of partnership, two or more persons bind themselves to contribute money, property, or industry to a common fund with the intention of dividing the profits among themselves. So, a partnership is composed of two or more persons that contributes to a common fund, cash or money, property or non-cash, and or industry or service, with of course again the intention of dividing the profits among themselves. One type of a partnership is the General Professional Partnership or GPP. This is one formed by persons for the sole purpose of exercising their common profession, no part of the income of which is derived from engaging in any trade or business. So, a GPP may be formed by professionals, for examples, a group of doctors in the exercise of their profession in medicine, or a group of lawyers to exercise their profession on legal matters, CPAs or accountants. However, no part of which income should be derived from engaging in any trade or business other than the exercise of their common profession. A general co-partnership. A general partnership which is not a general professional partnership. So if a partnership is not a general professional partnership, then it is a general co-partnership or a general partnership. Now, taxation of partnership and partners. So, here are the partnerships not subject to final tax under Section 26 of the tax code. First, you have the GPP. This is what we have already mentioned above. Second is a joint venture. If a joint venture or a consortium agreement formed for the purpose of undertaking construction projects or petroleum, coal, geothermal, and other energy operations under a service contract with the government, then such joint venture will not be subject to final tax. Now, in a GPP or in a general professional partnership, partner's distributive share forms part of his gross income subject to graduated income tax rate. So, kasi nga, si GPP not subject to final tax or to income tax, yung net distributable income ni GPP will be distributed to the partners. So, yung share or yung net distributive share of the net income of the GPP by the partnerships or of the part of the partners will be or will form part of that partner's gross income subject to graduated income tax rates or the Section 24A. GPP is not a taxable entity because it only acts as a pass-through entity where its income is ultimately passed to the partners. So, kasi nga, si GPP again is not a taxable entity, then yung income or yung net income ni GPP will be, of course, divided by the or among the, distributed among the partners. And in return, those income or share ng partners will form part of his, again, gross income subject to graduated income tax rates. Now, GPP may avail of either itemized deductions or OSD. Then, distribute the net income to the partner. So just like corporation, a general professional partnership may choose from either itemized deductions or the optional standard deduction, which is 40% of the gross income. Now, if the GPP avails of either itemized deduction or OSD, the partners claim any further deductions and may not avail the 8% tax rate because the distributive share is already net of cost and expenses. Actually, under train law, if the partners in a GPP is not earning any other income aside from his share on the net distributable profit of the GPP, the partners, if the partnership avails the itemized deduction, then the partners may still claim those deduction from said income, provided that in claiming the itemized deduction by the partners, he cannot claim those deductions that is already availed by the GPP or that is already deducted by the GPP in computing the net distributive or distributable share. Okay? So only those expenses not yet claimed by the GPP may be claimed by the partners with respect to said income or to said share from the net distributable share of the or net distributable income of the GPP. However, if the GPP avails the 40% optional standard deduction and the partners are not earning other income other than from his share from the GPP, then the partners can no longer claim any additional deduction from said share. So, again, if the GPP avails the 40% OSD, then si partners can no longer claim any additional deduction from said share of income from GPP. Important pointers in non-taxable partnership. General professional partnership as defined. Okay, ito na yung na-discuss natin earlier. Liability of partners in a general professional partnership. Persons engaging in business as partners in a general professional partnership shall be liable for income tax only in their separate and individual capacities. General professional partnership required to file return. So every general professional partnership shall file in duplicate a return of its income exempt under the tax code, setting forth the item of gross income and deductions and the names, TIN, addresses, and shares of each of the partners. So basically, letter C, where GPP is required to file return, this is for the purpose of determining how much the distributive share or the net distributive share to the partners for those partners individual taxation purposes. Kasi nga, di ba, walang income tax si general professional partnership. Kaya, required pa rin siya to file return para malaman ng BIR how much is the share received by those partners for, of course, the individual or the partner's individual taxation purposes. To determine magkano ba yung na-receive ni partners para taxan din natin siya. Okay? Or para makorroborate natin whatever the return na ifa-file ni partners. Kung in-include ba niya sa return niya yung share niya sa net distributable share or net distributable income ng general professional partnership. A manner of computing the net income of general professional partnership. For purposes of computing the distributive share of the partners, the net income of the general professional partnership shall be computed in the same manner as a corporation. So the computation of the net distributable income of a general professional partnership is just in the same manner as that of a corporation. Basis of the income that a partner will report. So each partner shall report as gross income his distributive share actually or constructively received in the net income of the partnership. So income payments to partners of a general professional partnership subject to a creditable withholding tax. Example of income distributions to partners are advances, drawings, sharings, stipends, etc. So, income payments to partners of general professional partnership are subject to 15% creditable withholding tax if the income payment to the partner for the current year exceeds 720,000 pesos and 10% if otherwise. So if ever there are income payments or as what I have mentioned earlier, yung mga advances, sharing, stipends, okay, if the partnership made those payments to the partners, may withholding tax yun. It means, uh, yung marireceive na ng partner is net of the 15% or the 10% creditable withholding tax. So for example, may advances si partners from the partnership, say 100,000, okay? So it is considered in substance income payments. So yung marireceive na niyan from the advances na 100,000 will be based on the rule if the income payment does not exceed 720,000 pesos, then it will be subject to 10% creditable withholding tax. So again, for our example, pag si partner may advances sa partnership na 100,000, since it does not exceed 720,000 pesos, then yung marireceive na lang niya is 90,000 pesos na advance. A net of that 10% creditable withholding tax. Next, joint venture. For a joint venture formed to undertake construction projects, be exempt from tax, the joint venture should be for the undertaking of a construction, should involve pooling of resources by licensed local contractors. Contractors are engaged in construction business and the joint venture itself must be licensed under TCAB. That's under Revenue Regulation 10 Series 2012. So those are the rules in order that a joint venture be exempt from tax. Etong apat. Now, to illustrate, for the taxable year 2019, Jaja and Dindin, partners of a general professional partnership, agreed to divide profits and losses 50 is to 50, respectively. Both are married without qualified dependents. The following are the details of the account. So, here are the accounts. Sale of service by the general professional partnership, that's 2.5 million. Cost of service by the general professional partnership, that's 875,000. And itemized deductions, again, by the GPP, 825,000. Okay, here are additional unliquidated expenses by the partners. So, for Dindin, traveling expenses not liquidated by the GPP, that's for partner Jaja, that's 34,500 pesos. For partner Dindin naman, that's 16,500. Representation expenses, personal credit card of partner used. For partner Jaja, that's 14 to 50. And for partner Dindin, that's 23,500. Now, my car, okay, cost of the car to be depreciated over 5 years used in the practice registered under the partner, not to the partnership. So 750,000 and 580,000. Salaries from the GPP for partner Jaja, that's 360,000 and 300,000 naman kay partner Dindin. And may mga passive income dito. You have the lotto winnings, interest on the bank deposits, and book royalties. Of course, since this is passive income, then the GPP will be subject to final tax with regards to this income, or with regards to this passive income. So the distributable net income of the GPP, share of each partner, and taxable income are computed as follows. So we have two scenario here. If the GPP avails the OSD and if the GPP avails the itemized deduction. So let's compute. The sale of services, that's 2,500. Of course, the same lang yon. Less ka ng cost of service, that's 875. 875. Remember that because a partnership or the computation of the net distributable income of the partnership or of a general professional partnership is just the same with that of a corporation. Kaya, in computing the OSD, we still or we considered the 875,000. Kasi nga, if it is individual, in computing OSD, you do not consider deducting the cost of sales or cost of services. Now, to continue, you have the gross income after the cost of service. That's 1,625,000 pesos for both OSD and itemized deduction. Now, less deductions if, of course, under optional standard deduction, that's 40% of the 1,625. That's 650,000. And for itemized deductions naman, ito, 825,000. Kaya you deduct here under itemized deduction, that's 825,000. So the distributable net income if the partnership avails OSD, that's 975,000 pesos. And if the partnership avails itemized deduction, the distributable net income is 800,000 pesos. Now, share of the partner, since their agreement or their sharing ratio agreement is 50-50, kaya for each partner, if are under the optional standard deduction, yung share nila each is 487,500. While under itemized deduction, share nila each is 400,000. That's 800,000 times 50 and 975,000 times 50. Ito yun. Note, since the partnership is a general professional partnership, therefore it is not subject to 30%. Although, class, yung computation niya or yung computation for the net distributable net income is the same as a corporation, it is not subject to 30% corporate income tax. Kasi nga, it is not subject to income tax. Okay? Or regular income tax. That is why the should be taxable income is the same as the distributable income. Now, let us compute the taxable income of the partners. Under GPP, under OSD pa rin, at saka under itemized deduction. So, if the GPP avails the OSD, then here are the computation for the for taxable income of partners Jaja and Dinding. So, the share of the partners are 487,500 and 487,500 based on our computation here. Okay? So, because nag-OSD na si GPP, okay, the partners, in computing their taxable income, can no longer avail any additional deduction from said share. Okay? So, 487,500, that's the net share of each partner in the GPP. You add the salaries from the GPP. So, si partners Jaja and partners Dindin actually receive salaries from the GPP. That's 360,000 kay Jaja and 300,000 kay Dindin. So, because it is an itemized deduction sa GPP, yung salaries nila, then it should also be income of or an income of Jaja and Dindin, which should be added in computing their separate taxable income. So, ito yung share nila again, plus yung salaries nila from the GPP kasi parang ano yon, compensation income. Okay? So, part yon ng in computing their taxable income, their individual taxable income. So, that's 487,500 plus 360. The taxable income of Jaja or partner Jaja is 847,500. While for partner Dindin, that's 787,500. Now, here's the case if the partnership avails the itemized deduction. Okay, to compute the taxable income of partners Jaja and Dindin, okay, you get muna the share of each partner to the GPP from here. That's 400,000 for both for each partner. That's 400,000 for Jaja and of course for Dindin. Now, because the partnership again avails the itemized deduction, then the partners can still avail additional itemized deduction provided that the itemized deduction, okay, deducted, okay, by the partners in computing their taxable income. Okay, this itemized deduction should not be the itemized deduction that has already been deducted, no, in computing the net distributable share ng uh, partnership. So, dapat itong mga traveling expenses, representation expenses, at saka depreciation of the car na itemized deduction, dapat this is not included in the itemized deduction that is reflected here. Okay, that is being deducted in computing the distributable net income ng partnership. So, if hindi, then pwede siya i-avail ni na partners. So, ito yon sa ibabaw. Okay? So, you have the traveling expenses, representation expenses, and depreciation of the car. Okay, deduct that from the share of each partner. Okay, i-deduct mo yan sa tag 400 nila. Ayan. So, yung net share of each partner in the GPP is 201,250 for partner Jaja and 244,000 pesos for partner Dindin. So, net na yun ang mga itemized deduction na in-avail nila. Of course, again, you add the 360,000 and 300,000 for partner Jaja and Dindin. Kasi nga, parang compensation income nila yon. Okay? The taxable income, therefore, ni partner Jaja is 561,250 pesos. And for partner Dindin, that's 544,000 pesos. Note again, Lotto winnings is subject to a 20% final tax. Interest on the bank deposit is subject to a 20% final tax, while book royalties to a 10% final tax. Okay, this comprehensive illustration applies the rules as stated in the regulations, except the last, where the partner also has other gross income apart from his share in net income of the GPP. Note again that under OSD, all other unliquidated expenses of the partners are no longer allowed to be deducted. So, ito yung sabi ko kanina that if the GPP avails the optional standard deduction, then the partners in computing their taxable income can no longer avail any additional deduction from said income. The computed taxable income is returnable to the individual income tax of the partners or partners Jaja and Dindin, hence subject to graduated tax under Section 24A. Now, continuing the illustration, assuming that Jaja has income from business other than that of the partnership, and that's the following data. So, what if now, si partner Jaja, other than the income from or his or the share of partner Jaja sa net distributable income ng partnership, may other income pa siya. Okay. So, ito yung data. May gross sales siya, of course, may returns, allowances, and discount, and cost of goods manufactured and sold. At saka may itemized expenses din siya. Now, compute for Jaja's taxable income and tax due. Now, to compute the taxable income, okay, of partner Jaja, if may income pa siya again from other sources, that's gross sales, okay, from the above, ito, 5 million minus uh, returns, allowances, and discount, may net sale ka na 4,755,000 less the cost of goods sold, that's 1,500. Okay, so the gross income from business, okay, of partner Jaja is 3,255,000. Less deduction, ito yon, the itemized expenses of from the business of Jaja, which is 980,000. Okay, so your taxable business income or taxable income from the business of Jaja, that's 2,275,000. You add the share of net income from partnership. Say assuming na under the itemized deduction scenario, okay, ito yon, that's 500, I don't know, 561 to 50. So you add here the 561 to 50. Kaya yung total taxable income ni Jaja is 2,836 to 50. That's from the business of Jaja at saka yung share niya sa partnership business or sa partnership. Ayan, that's 2 million, again, 2,836,250. Of course, you compute the tax due using the tax rate. Revised Section 24A per Republic Act 10963. Ito yon. So, the 2,836,250 belongs to this bracket. 2 million to 8 million, which is 490,000 plus 32% of the excess over 2 million. Therefore, the tax due niya is 757,600. Okay, partnership subject to tax. So, kanina, that's general professional partnership. It is not subject to tax. Okay? Now, let's talk about partnership subject to tax. So, those whose income is derived from trade or business. So, if the partnership's income is derived from trade or may business sila, ay considered as corporations. So, they are considered as, or those type of partnership is considered as corporations under the tax code. So, partners' distributive share is subject to final tax of 10%. If it is RC, NRC, and resident alien, and 20% naman pag NRA, ETB. So, if you're a partner in a partnership whose income is derived from trade or business, again, that partnership, okay, is considered as corporation. Therefore, you as a partner will be considered as stockholder or shareholder. Remember that in a corporation, okay, the share of the stockholders is through dividend. And remember that dividends received by residents and citizen is subject to a 10% final tax. Okay? So, in here also, again, a partnership, okay, a partnership, again, whose income is derived from trade or business, yung share ni partners, okay, from those income is subject to 10% final tax. You're not allowed to claim deduction since they are subject to final tax. So the partnership itself is subject to 30% corporate income tax because it is considered as corporation. Then, the tax rate applicable to that partnership is also 30% corporate income tax. Important pointers in taxable partnerships. The taxable partnerships required to file cumulative declaration and annual return. So taxable partnerships are required to file a cumulative quarterly declaration at the final return, just like corporations. Share of partner in a taxable partnership subject to final tax. Okay, the share of partners in the net income of a taxable partnership shall be subject to 10% final tax. Kasi nga, it is considered as dividend. Okay? So, illustration 2. Kiana, single, is a partner in KM partnership. So, a general co-partnership. Again, general co-partnership. Kaya, subject to a 30% corporate income tax. Kiana derive income from her profession as auditor. Okay, it is agreed upon that partner Kiana is to receive 60% share in the profit and loss of the KM partnership, while partner Mark will receive 40%. Compute for the taxable income, regular income tax due, and final tax of Kiana using the following data. Now, may income si Kiana from the partnership and may income din siya from profession. So again, to reiterate, yung si Kiana, okay, may partnership siya. Yung partner niya is Mark. Okay. And their partnership is not a GPP but a general partnership. Again, subject to 30% corporate income tax. At saka may income din siya sa kanyang profession. Okay? So ito yung data, no? Okay, to compute, okay? Gross income, or to compute the net income of the partnership, okay, and the distributable income, that's 3.5 million. Okay, gross income of KM partnership less partnership expenses of 1.2 million. That's net income before income tax, that's 2.3 million. Of course, before, unlike GPP, kailangan pa yan kuna ng 30% corporate income tax. Kasi nga, si KM partnership is a general co-partnership. Considered to be a corporation, subject to 30% corporate income tax. Okay, so to continue, that's 2.3 million, okay, times 30%, therefore, yung income tax ng KM partnership is 690,000 pesos. Kaya yung net income after tax, okay, or yung distributable income ng KM partnership is 1,610,000 pesos. So ito na yung basis mo, okay, or ito na yung distributable income mo. Yeah, how to distribute this one? Based on their profit sharing agreement na 60% daw kay Kiana at 40% kay partner Mark. Okay? So taxable income, regular income tax, and final tax due of partner Kiana. Okay? So si partner Kiana may final tax siya from share niya sa 1,610,000. That's 1,610,000 times 60% na ratio, yung agreement nila. Yung share niya sa 1,610 is 966,000 pesos. Of course, again, kasi nga, diba, it is considered as dividend because the partnership is a general partnership. Then, 10% na final tax, that's 96,600. Okay? So, how about the regular income tax of partner Kiana? Okay, gross income from profession. Remember, my gross income from profession siya na 800,000. Ayan. Less mo si expenses from profession niya. Ito yon. 130,000 pesos. Kaya, yung taxable net income niya is 1 million. Or no, the taxable income or the taxable net income of Kiana from his profession should not be 1,610,000. So maybe this is just an error. Okay? So what should happen is 800,000 gross income from profession less expenses from profession na 130,000, the taxable net income of Kiana should be 670,000 pesos. Okay, yung 670,000, assuming 670,000 daw yung amount nito. Okay? The tax due of which will be computed based on the, again, on the table. Ito, 670,000 belongs to 400 to 800,000 na bracket. So, alam nila yon how to compute the tax due. So, basically, yung this should not be 1,610,000. Again, this should be 670,000 pesos. Okay, this is just maybe there is just an error, no? Typo error or omission ba? Okay? So that's it. That's pretty much the discussion for the rules on income taxation for partnerships and the partners. Okay, you can refer to other sources. That's Ampungan, okay, the books of Ampungan, Balyada, and Valencia. Okay, so that ends the topic for this video lecture. Peace.